But if there's one group kicking rocks around who can't get enough of the global instability, it's gold miners. Even central banks, which could normally turn a handy profit selling into the market at these sort of levels, bought more gold in the last quarter than at any time since the Bretton Woods Agreement collapsed 40 years ago, an event that ended the convertibility of gold and the US dollar. I spoke to one of the nation's bigger gold miners, St Barbara CEO Tim Lehany, who operates at the historic area of Leonora, north of Kalgoorlie. Well, Tim Lehany, the price of gold obviously is very high. Now, usually when this happens, there's a big supply response from the mining industry. Are we beginning to see that around the world now?
Oh, look, Alan, I think with a very high gold price, yes, you will see more gold production come on stream at a higher cost. And we are seeing that, and we're seeing the cost curve for gold shift up. But we're in a position where we have higher margin, lower cost production, and are moving further to a lower cost position with development of our core asset, the Gwalia mine at Leonora. So St Barbara's highly cash generative and high margin production.
What's your average cost?
Our average cost this year we're forecasting to be of the order of $800, but that includes very high cost production at a more mature operation of ours at Southern Cross. So the Gwalia mine, which is really the story of our future, our guidance this year is $610 to $640 an ounce, which gives us a very high margin on that production. And our production range there this year, 175 to 190,000 ounces.
Gold, I guess, is a very high margin business, and the thing is, the great thing about gold mining, I guess, is it's not a cost plus situation. You don't sort of have your cost and then you get a margin on top of that. It's the price is set according to speculation around the world.
It is, but people who put capital into gold mining take that risk as well, and it's not always been like this. I've been in the mining game for over 20 years, and I've seen times when it's been the gold price has been very low. When I started, it was less than $300 US an ounce. So people put capital in the expectation of higher profits when the gold price is good.
So, as you say, you've been kicking around the gold mining industry a long time. What do you think the price is likely to do now?
Oh, look, I think the price and consensus seems to be that the price is going to remain strong for some time. There'll be a lot of short-term volatility, I think, but our focus is really on our costs of production. And our strategy with St Barbara has been to focus on value and to drive the company to a lower cost position to build a sustainable gold business, and that's what we're doing with development of our main asset at Leonora.
And the main thing, I guess, is that the Gwalia mine is open at depth. So even though you've got 10 years of reserves there, you've got a long way to go after that even, probably.
Our reserves there run to nearly 1,800 metres below surface. And it's a very good quality asset. We've got 2 million ounces there at about 8.9 grams per tonne, which is very high grade by Australian standards these days.
We're just looking at the price situation, the global supply-demand position. What everyone worries about with gold is when's the central bank holdings going to hit the market at some point. Every time the price goes up, everyone worries about that. In fact, what's happening is they're buying, in very large amounts, more than anyone thought.
Well, central bank buying did certainly increase last quarter, and I think it's a sign that people are taking gold as a genuine store of value. But once again, we're price takers, so we really focus on the things that we can control, like our costs. And with production growing from Gwalia at sort of $610 to $640 an ounce, that's where we need to be, and that's a good, solid, high margin business.
And how important do you think gold mining is becoming to Australia as an export?
Oh, look, it's a solid export earner, and I think one of the things about gold mining is that there's a large number of smaller operations where you put a lot of our cost into local business and local employment. So I think from a regional business development perspective, I think it's very important to Australia.
As you say, it's a very fragmented business in Australia. There aren't many large producers. Do you think there's potential for the smaller producers to be consolidated together and for there to be sort of a rationalisation of the industry?
Look, there's been certainly a lot of speculation around consolidation, and I'm sure that there will be more consolidation, but our shareholders are telling us that we've got a very solid value profile in front of the business. So we're focused on our organic growth profile, on pushing the development of our high-grade asset at Gwalia, and on putting money into exploration. And nothing will create greater value for a company like St Barbara than an exploration discovery. So this year, we will anticipate that we'd spend about $20 million, and over a third of that will go directly into the drill bit, drilling targets.
A lot of Australian companies are looking overseas in various places, Thailand, Africa and so on. Any thought of that, doing that yourself?
Look, first prize for us has always been Australian production and Australian assets, but Australia is becoming more mature as an exploration province, and we're interested in opportunities in similar time zones, Southeast Asia and the Asia Pacific, which is a very prospective area for gold and relatively underexplored.
It's interesting, isn't it? One of the reasons people like gold as an investment asset, as a sort of a store of value, is the proposition that there's not that much being made. It's a sort of a scarce commodity. But there is a fantastic amount of exploration occurring. So you've got to wonder how scarce it's going to end up being.
Oh, I think it will
always be scarce.
Become scarcer. Yeah, I mean, we as I said, world production is declining and the world discovery rate is declining. But and in Australia particularly, and in jurisdictions like Australia that are well explored, it's becoming harder to find larger gold deposits. Having said that though, we have a number of really good quality exploration targets, and this year we'll put about 40,000 metres of drilling into the ground on 10 or 12 high priority targets.
Thanks for joining us, Tim Lehany.
Thank you, Alan.